I do, Scott, and I think what's happening right now is when you're talking about selling rallies, you're selling rallies in growth, and when you're talking about buying dips, you're buying the dips as it relates to cyclicals. But I think markets right now are trying to figure out what really matters most in terms of retail and institutional ownership. Is it the earnings that we saw from Amazon, from Alphabet, from Apple, or is it the real disappointing earnings that we've seen from Netflix and from Facebook? Markets are, I think, right now struggling with that. And I think what you're ultimately going to see as Treasury yields move towards 2% is a lot of investors who have been seeking income and using these mega cap equities basically as bond proxies. I think they're going to pare back on some of those holdings. It doesn't mean that you don't want to hold them, but they've been at such a massive overweight. And I think that's going to place some pressure overall on the S&P 500 as we begin to kind of pare back holdings on these mega cap equities, because higher yields, you're not going to need us to have such extensive ownership.
So, Josh, that's like been the question we've been asking for months. When, if people are going to move out of those big stocks, and then what the ultimate impact is going to be on the market. It's been really the only thing that's been a consistent holder up of the market, right? These mega cap stocks, even when you had that rolling correction below the surface and a lot of stocks got obliterated. The original reason why Mike Wilson's fire and then ICE call never came to fruition was because the mega caps never really rolled over. Joe's suggesting now you could get money coming out of those stocks. I can't imagine a scenario in which you get money coming out of the biggest S&P, the biggest stocks in the biggest S&P group, and somehow the market can be all right with that and not retest at minimum.
Yeah, I don't think the retest itself would be the end of the world. But like, you had Amazon at its low point last week prior to reporting those incredible earnings in an 18% drawdown. Historically, if you've bought Amazon in that range, 20% off its high, you've been rewarded really quickly. And maybe that was the case again. We'll see if the rally from the end of the week sticks. But like, Netflix is not a mega cap. I know we always talk about it, but it's not that important market cap wise. Apple and Microsoft are holding up the whole show. There's no way around that. That's just the truth. That's what's going on right now. They have some help. Large cap consumer discretionary names in there like Home Depot, et cetera, are also, holding things up. Some big financial firms. Berkshire Hathaway's been a tentpole this year so far. But for the most part, it's Apple and Microsoft. And if you have a reason why those two names should suddenly fall 20%, then definitely you'll get a retest and more. If you don't have a reason, given that they've reported earnings and given guidance and are buying back boatloads of stock, if you don't have a reason, then that Wilson scenario remains difficult to see. I would just point out diversification, and I talk about this on the show all the time, it's still undefeated. If you're diversified right now, like if you own value stocks, you're only down 2 to 3% from the highs in those names. If you own an S&P 500 index fund, 6 to 7%. If you own small caps, you're down 20%. The NASDAQ 100, 11 or 12%. So it's like degrees of good and bad. And if you've got an equity balance, which I think for most investors who are not professional traders, they should, this is really not that bad. And if we revisit those lows, it still won't be that bad. And I think for most people, that's the experience they're having. The thing is, everybody owns one or two of those names that are down 70 or 80%, right? And like, people can fixate on that because they're popular stocks in some cases. But that's not most people's portfolios. Most people are not running a concentrated innovation strategy. They just aren't.